Good morning from our global headquarters in New York. I'm Danny Berger. Manus Cranny is off today. Welcome to Bloomberg Brief. Let's set your agenda. Ceasefire talks. President Trump gears up for a call with President Putin. Israel strikes Gaza, ending the truce with Hamas. Caution and order. U.S. Trade Representative Jamieson Greer attempts to minimize tariff chaos ahead of the April 2nd rollout. And German lawmakers vote on unlocking hundreds of billions of euros in defense and infrastructure spending. We'll talk infrastructure opportunities with KKR head of real assets, Raj Agrawal, later this hour. So stay with us for that. In the meantime, it is a future session that is starting to weaken after we somewhat came back from that correction. 2 solid days of gains, unchanged on your S&P 500 futures session, little change on the NASDAQ 100. By the way, Bank of America's latest fund manager survey, investors/U.S. equity exposure by the most in record in recent weeks. Fund manager allocation now 23% underweight. That is the lowest since June 2023. So the sentiment is hurting, but maybe helping sentiment this morning is that Jamieson Greer is trying to reinstate a more process-oriented approach ahead of April 2nd. It was mixed data yesterday, therefore we got a mixed bond market. The 10-year fell yesterday while the 2-year yield rose. Little movement this morning, higher by a basis point. We're at 4.31 on your 10-year yield. Oil moves to a 2-week high, edges higher following Israel's military strikes in Gaza. And gold close above 3,000 for the first time ever yesterday, and we stay above there at $3,026 an ounce. Some individual stocks to keep an eye on this morning. Alphabet, that is certainly one of them. It is unchanged this morning, but sources say that it restarted discussions to purchase cloud security company Wiz for a $33 billion deal. That would be Alphabet's largest acquisition to date. Meanwhile, Capital One is paring some of its losses that it had yesterday, down just 0.1%. There's a report that staff at the U.S. Justice Department had concerns about their $35 billion merger with Discover Financial. So much for a lighter touch when it comes to regulators. Finally, a check on Lucid. Let's get a look at those shares this morning. It is up 2.78%. The EV maker was upgraded to equal weight from underweight at Morgan Stanley. Morgan Stanley saying that they see potential for the stock with new leadership that can put forward an executable AI strategy. So I mentioned we bounced back from a correction, at least 2 solid days of gains. Does it last? The sentiment seems to be turning, and economic sentiment in particular. A growing choir of economists have been slashing their U.S. GDP forecast this year. Here's just some of them. The OECD cut its outlook to 2.2% from 2.4% on Monday, citing tariffs. That follows downgrades from Morgan Stanley, from Goldman Sachs, from Macquarie, from RBC. BNP Paribas writes, quote, "The outlook has worsened because of a surge in uncertainty that is having a chilling effect on consumption and investment decisions." Pleased to say joining us now is Isabelle Mateos, Lago, chief economist at BNP Paribas. Isabelle, wonderful to see you this morning. The downgrades are coming. What would it take for you to reconsider your GDP outlook for this year?
Good morning, Danny. Look, it's not going to take very much because, in fact, we'll be publishing a revised outlook very soon, and I guess we'll be joining that choir that is revising down our growth forecast for the year, and really more than well, it is a revision, but it is really pulling forward our assessment of how the economy was gonna play out this year and next. What's happened is we, and I think many others, were expecting the bulk of the tariff action to come much later in the year, and actually it's been coming fast and strong, and as a result, the negative impact on growth of that uncertainty is being pulled forward as well. And so, yes, you can expect us in the numbers that we'll publish very soon to also revise downwards our GDP forecast for 2025.
That's a great tease, Isabelle. Really looking forward to when those numbers and the accompanying note comes out with it. In your assessment of a worsening economic picture, how much of it is about tariffs and how much of it is just about the uncertainty of it? Isabelle, in other words, if we get to April 2nd and there's a tariff policy which is clear and cohesive and not the one-offs that we've been seeing, is that enough to stave off some of the worst of economic declines?
So we are probably getting to peak uncertainty. I'm not sure we're there yet because, sure, we'll get some announcement on April 2nd, but it's not as if things are going to stop there. There's going to be an announcement. People are going to try to work out how to make sense of it, but then there's going to be a response, and then there's going to be negotiations. And so I don't think it would be realistic to expect uncertainty to start decaying right away. But yes, as we get through the year, as we get more data points, uncertainty will hopefully start to diminish, and activity can resume at a more normal pace. But it's true that right now, whether you're a consumer or a corporate, it's very hard to make any decisions, and so the economy is a little bit in pause while waiting for more clarity to come. And that's true about tariffs, but that's true, by the way, also about fiscal policy.
Well, on that point, we're going to get a Fed decision this week. It's crazy how busy this week has already been, even though it's a Fed blackout period, Isabelle. This is supposed to be when everything is calm. The Fed faces a tough decision. Neil Dutta from Renmac, I think, put it really interesting about the politics of this decision, saying that if the Fed is hawkish, markets will probably weaken further, and as a result, they'll take some of the heat off the White House for the recent sell-off. If they're dovish, they may well encourage the administration to dial up the heat even more. Thus, it's best to say nothing. Isabelle, in other words, politics dictates that the Fed literally tries to do nothing in this rate decision. Would you agree with that?
Well, I mean, there's doing nothing and saying nothing. I think saying nothing, unfortunately, for Jerome Powell is not really an option. Doing nothing is exactly what we think they're going to do, and in fact, for quite some time, because they are facing a difficult balancing act. Yes, there are signs the economy is slowing down. But even more importantly, there are signs that inflation expectations are getting de-anchored. And that's very, very serious. I mean, it was one thing to look at inflation falling very, very, very slowly towards target and to kind of say, well, yes, it's falling slowly, but it's falling. It's quite another to see the latest survey of inflation expectations showing them at multi-decades high. This is something the Fed cannot stand idly by. This is, you know, the Fed's legacy is at play here. And so I think they have to take that inflation risk very, very seriously. But as you noted, without overdoing it, without coming across as overly hawkish, because then they would tilt, they could get that balance wrong. So it's going to be, as ever, a very tricky balancing act for Jerome Powell tomorrow. But he's shown us that he's very good at that. So let's see. But in terms of action, we do think they're going to be on pause for quite some time, quite simply because of this issue with inflationary expectations being too strong.
Is there a risk then, Isabelle, if the Fed is stuck between inflationary forces and higher expectations? I mean, it's this mix we saw in the University of Michigan survey, right? And concerns of an economic downturn. Does policy stay too tight? Does them doing nothing, in essence, do something to this economy that is getting tightening fiscal and at the same time, maybe monetary policy that's too tight for the current environment?
Well, actually, I would think of it almost the other way around, in the sense that with inflation expectations rising, and it's not just households, if you look at break-even, they've been rising as well. If they keep monetary policy on hold, actually policy is easing. So it's not quite the way you described it. The other thing to keep in mind that is quite different from the recent past is, remember the Fed's mandate is maximum employment. It's not maximum growth. And the reality is immigration flows have been plummeting. And so the break-even rate in terms of job creations is almost certainly quite a bit lower than it was over the last 4 years, probably closer to 100,000 or even lower than that, than 200,000. And so you could see a weakening of growth, a weakening in job creations that the Fed wouldn't think, okay, this is not a worry because actually the unemployment rate is not moving very much. And so that's fine with us. We can be on hold.
Isabelle, this has been so excellent. Please come join us again. We could talk for hours longer, I am sure. Isabelle Mateos, Lago of BNP Paribas. Let's get you up to speed now on some other stories that are trending on the terminal this morning. German lawmakers will vote today on a bill that is set to unlock hundreds of billions of euros in debt-financed defense and infrastructure spending. Chancellor-in-waiting Friedrich Merz and the Social Democrats sealed an agreement with the Greens that should secure the two-thirds majority needed for the law to pass. President Trump says President Xi Jinping would visit Washington soon in the not-too-distant future. Discussions between the two countries have been stuck at lower levels. Both sides are deadlocked on how to proceed. A Chinese Foreign Ministry spokeswoman said that she had no information to provide on a potential Trump-Xi meeting. Elsewhere in China, Bloomberg sources say that Chinese authorities are investigating CK Hutchison's sale of its overseas port businesses. It signals that Beijing is not happy that the Hong Kong conglomerate divested its Panama operations under U.S. pressure to BlackRock, among others. Several agencies are looking into potential security breaches or antitrust violations. It's not clear at this moment what levers China can pull in order to block this deal. Coming up on your Bloomberg Brief, Presidents Trump and Putin are set for talks today. On the agenda, Ukrainian land and assets. Stay with us. We'll have more on that next.
We'll be talking about land. We'll be talking about power plants. That's up, that's a big question. But I think we have a lot of it already discussed very much by both sides. We're already talking about that, dividing up certain assets.
President Trump speaking on Air Force One about today's talks with his Russian counterpart, Vladimir Putin. Land and assets are on the agenda. For more, we are joined by Bloomberg's Russian economy and government editor, Greg Sullivan. And Greg, this call will be coming in a couple hours' time. IFX reporting that Peskov says that it will happen at 9 a.m. Eastern. That's 4 p.m. local time in Moscow. What's on the agenda for this conversation?
Well, we know a few things are on the agenda. Obviously, the big one is the 30-day truce that Trump has gotten Ukraine to agree to. He's now seeking to get Vladimir Putin's buy-in so that they can continue on this process. Now, there are certain conditions that Putin wants to demand in order to agree to this, and some of which Trump alluded to. He said that the two would likely discuss land considerations. Now, both sides have had red lines on certain territorial demands. Obviously, Russia is demanding to keep the land that it has seized, while Ukraine is hesitant to give up any sovereignty over over its own land. So it's hard to see how an agreement will be reached there, but we do know that territory is likely to be discussed, as is a power plant that President Trump alluded to, a nuclear power plant, the largest in Europe.
Well, Greg, President Zelensky of Ukraine had wrote on X, he had a conversation with Macron saying that Ukraine is ready for an unconditional 30-day ceasefire. However, for its implementation, Russia must stop setting conditions. It sounds like Russia is coming to the table with conditions. What role, if any, is Ukraine going to be playing in its own future, its own ceasefire talks?
That is absolutely right. Russia is coming to the table demanding a lot. They are trying to come from a maximalist position. Some Western analysts have assessed that Russia is making these demands, which are very hard for Kyiv to accede to, because they are calculating that they can continue fighting. Right now, Russia has been making slow, albeit costly gains in the east, and they've almost successfully dislodged Ukrainian troops from large areas of Kursk that they had occupied after a surprise incursion. Putin is likely calculating that this strengthens his hand at any future negotiating table. We have reported that Putin is likely to play for time, has been playing for time in this process, and the maximalist demands are definitely a part of that.
What do we understand about what sort of security guarantees might be on its way for Ukraine? Because this had been something that they'd appealed for, the idea that they wanted to make sure they weren't set up for failure after any sort of ceasefire or any sort of negotiations. Does the U.S. seem willing to provide that, or any of its allies?
That is actually the key question heading into all these negotiations. Kyiv has been very insistent that security guarantees need to be strong enough to deter future Russian aggression. They do not want a ceasefire to set up the potential for the resumption of hostilities down the road at some future time. But it's really hard to see what the two sides can actually agree on. While we know that the UK and France have been leading efforts to try to create the framework for a peacekeeping force that could be in Ukraine after any such ceasefire, Russia has categorically rejected having NATO troops on its territory, saying it needs neutral troops from neutral countries. Furthermore, as you mentioned, it's unclear the U.S. would provide any backing for security guarantees. Members of the administration have already ruled out putting boots on the ground, and Trump just doesn't seem interested in providing those guarantees. Yet Europe says that they need the U.S. support to make those guarantees effective. So it is a very tough and sticky question, and will be at the center of any negotiations for especially a longer-term settlement.
Again, the talks between Putin and Trump set to kick off at 9 a.m. Eastern. Greg, thank you so much for setting us up ahead of it. That is Bloomberg's Greg Sullivan. Now, elsewhere in Washington, President Trump's top negotiator, Jamieson Greer, is attempting to bring some order ahead of the imposition of sweeping new tariffs planned to be announced on April 2nd. For more, we're joined by Brendan Murray, who tracks trade for Bloomberg. So, Brendan, the team's reporting suggesting that Jamieson Greer is trying to come in again and bring this order. What difference does that make as we approach the April 2nd deadline?
Yeah, that's right. So when you listen to President Trump describe reciprocal tariffs, he says that it's very simple. Whatever you charge us, we're going to charge you. But the reality is it's a lot more complicated than that when you go country by country and weighing up the average tariff rate of each country, and then you factor in non-tariff barriers, things like value-added taxes and environmental regulations and all these other grievances that the U.S. has. You start doing that country by country, and you wind up with a really messy bureaucratic situation. So what we're reporting is that the U.S. Trade Representative Jamieson Greer is trying to establish some semblance of order here. We're just about 2 weeks away from reciprocal tariff day, which Trump has called a liberating moment for the U.S. economy. So, and that's going to be important because markets obviously are reeling in some of this uncertainty. Companies are indecisive about investments that they want to make, and of course there could be legal challenges ultimately to whatever the president, however the president decides to pursue the application of tariffs. So inside the White House is a very fierce debate going on right now about how exactly they're going to roll these tariffs out.
And speaking to that debate, Brendan, because there's been this drip feed of reporting about what it would actually look like. The Journal having a story overnight saying that at one point this idea of having different tiers of tariffs was considered to make it more simplified. What does it suggest? The fact that we are just mere weeks away from this deadline, and that debate is still going on in terms of what it actually looks like?
Yeah, I think what it suggests is they're not going to be ready for the full execution of the plan in 2 weeks. But what we'll get is the beginning of, a longer process, more investigations, more reviews that will lead to tariffs down the road. Obviously, they're building April 2nd up to be a big announcement. So we should expect news on that day. But as far as the implementation of tariffs, it sounds like it's so complicated that they're going to need a lot more time to get everything in order, make sure it's legally compliant, and to make sure that they don't have to walk this back 3 months, 6 months down the road and create even more confusion.
What does that mean, that confusion, for nations putting reciprocal tariffs back on the U.S.? We got that initial spat of them from Europe, from Canada. What are countries doing gearing up for April 2nd?
Well, countries are taking a couple of different tacks. They are trying to talk with the administration, reaching out, sending delegations to Washington, the typical sort of shuttle diplomacy. Others are getting their retaliation lists together and saying, how can we hit back in a way that will be effective and not just provoke another escalation? So there's a range of responses that countries are coming back to Washington with, and some are, like Canada, are confrontational and aggressive. Others are more on the diplomatic side. But it's yet to be seen which one of those approaches will actually work with Trump.
Brendan, thank you so much. A lot might happen in 2 weeks' time, in the lead up to 2 weeks' time on the April 2nd deadline. Bloomberg's Brendan Murray. Coming up, a long-awaited return to Earth. The NASA astronauts are coming home finally after 9 months in orbit. We're going to have more on that story next and your front pages here on the Bloomberg Brief. Welcome back to Bloomberg Brief. Let's take a look at some of the front pages this morning on your Tuesday. First up, the Bloomberg has this, that President Trump picked Fed Governor Michelle Bowman, confirming our earlier reporting, to serve as the central bank's vice chair for supervision. Bowman is expected to sport a lighter touch on bank regulation than her predecessor, Michael Barr. She said if confirmed, she will promote a safe and sound banking system with a transparent and tailored bank regulatory framework that encourages innovation. Next up, the Financial Times has this on their front page, that hedge fund short sellers have made $16.2 billion betting against Tesla shares over the past 3 months. Tesla's market value has plunged by more than $700 billion over the same period, wiping out $100 billion from Musk's net worth. The recent profits for short sellers do mark a partial reversal, which has been highly painful for them over in recent years. Now, finally, the Wall Street Journal has this. The astronauts are coming home. Butch Wilmore, Suni Williams departed the ISS after 9 months in space. It was only supposed to be a couple days. A SpaceX vehicle carrying the astronauts undocked from the ISS just after 1 a.m. Eastern time, putting them on track to splash down near Florida just before 6 p.m. ET. What a big greeting I'm sure they are set to get. They arrived at the ISS last June on a Boeing spacecraft. Again, the plans had been to stay for a week. There had been issues, but they're finally coming home. And we're all looking forward to greeting them in Florida when that happens. All right, coming up on the show, we look at a Google merger. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. Ceasefire talks. President Trump gears up for a call with President Putin. Israel strikes Gaza, ending the truce with Hamas. Caution and order. U.S. Trade Representative Jamieson Greer attempts to minimize tariff chaos ahead of the April 2nd rollout. And German lawmakers vote on unlocking hundreds of billions of euros in defense and infrastructure spending. We'll talk infrastructure opportunities with KKR head of real assets, Raj Agrawal, in just about 10 minutes' time. Little change, basically calm to a little bit lower on your S&P 500 futures session. That's after 2 consecutive days of gains. By the way, a new Bank of America Investors Fund Manager survey coming out, slashing U.S. equity exposure by the most on record in recent weeks. They are now 23% underweight. For your bond market, it was a mixed picture with U.S. data. Retail sales were weaker. The control group was above expectations, so your 10-year yield falls while 2-year yield rises. That somewhat reverses this morning. Your 10-year yield up 1.7 basis points at 431. NYMEX crude, that goes to a 2-week high, up 1.33%, following Israeli military strikes in Gaza. And gold, that is holding about $30,000 an ounce. It crossed that level, closed at that level yesterday for the first time on record. Now let's get back to our main story, with U.S. tariff disorder having been a feature of this month. But President Trump's top trade negotiator is attempting to do something about it. Ahead of the sweeping new tariffs being imposed next month, Bloomberg sources learned that U.S. Trade Representative Jamieson Greer is looking to wrestle control of the planned April 2nd announcement. For more, we are joined by Michael Shepard in Washington, D.C. Shep, so great to see you this morning. It's a difficult task for Jamieson Greer, considering he was only confirmed at the end of February. What is the roadmap ahead of him to try to get that control back?
Well, it's a complex one, Danny, because coming up in less than 2 weeks, as we've been discussing on this program and before, is this April 2nd deadline to come up with what Trump has called reciprocal tariffs, as well as levies on a series of other industries, including autos, semiconductors, and pharmaceuticals. And the reciprocal tariffs are going to be the most challenging one, as our colleague Brendan Murray was just outlining. It's simple on its face that we charge them what they charge us, as Donald Trump has tried to put it, but really that belies its complexity. In fact, when you think about the wide range of products and the various kinds of tariffs, and even some of the taxes like consumption taxes and value-added taxes that the administration has also targeted, trying to calculate exactly how much to hit each country and hit each good with among the thousands of goods and hundreds of potential countries that could be subject to these levies, it's complex. And he wants to be sure that there is less uncertainty in this process going forward than there has been so far. The start of the administration has been defined by Trump's tariffs, but the rollout has been characterized by a lot of chaos and uncertainty in the markets and for businesses. And Jamieson Greer is trying to hear from businesses and get their input ahead of time to try to stave off some of the last minute, really frightful moments for industries like autos, which saw, really potentially devastating consequences to their supply chains and to their pricing plans with the Canada and Mexico tariffs, for instance. But you multiply that kind of uncertainty across industries, and that was what he is trying to avoid.
And let's be honest, it's not just industry that would welcome some order. It certainly would be investors, too. It's something we keep hearing. It's uncertainty that's the problem, more so than perhaps even the tariffs themselves. But, Shep, has it been an issue of just Jamieson Greer not being there, that it wasn't until the end of February, that's part of the reason that we've had this bumpy rollout? Does it change now that he's there? Or do we still have these competing forces between Navarro and Lutnick and Trump himself that might still lead to bumpier rollouts?
Well, there is an element of that. When you think of the president and certainly Peter Navarro, they're known for shooting a little bit more from the hip and then asking questions later. And we've seen some of the consequences and price of that approach in the past weeks, with the market really taking a turn for the worse. The downdraft has hit equities, especially in the tech sector, but really across the board as people grow concerned that the impact of tariffs could be not only higher inflation, but slower growth and perhaps, weakening demand by businesses and by consumers who are eyeing all of this uncertainty. So now this may put him kind of at loggerheads with some of those forces. But at the same time, the Trump team is also looking at some recent polling numbers, including from NBC News, that signal that Americans are growing a little bit less comfortable with Trump's approach on the economy. The NBC poll, in fact, 54% of registered voters that they had surveyed were disapproving of the president's handling of the economy so far. And that isn't a figure that the new administration wants to see so early in the game.
He, of course, also showed a cratering in opinion about the Democrats, too. Hey, Shep, before we let you go, I just want to wrap up what the agenda is for the White House. And around 9 a.m., we're going to be getting a call between Trump and Putin. What are we expecting?
Well, this is a crucial early call between Trump and Putin to get the ball rolling further on what Donald Trump hopes to be an end to the war in Ukraine. It's something he's promised voters during his campaign, and he has managed to get Ukraine to agree to a 30-day cessation of hostilities. Now the job is to get Vladimir Putin to go along. One of the concerns in Ukraine and among its European allies is that Donald Trump may be giving up or be prepared to give up too much in this early discussion with Putin. And that includes some of the things that we know about, Danny, the question of territories in the east and Crimea, that Putin may just insist that, look, if you want 30 days of ceasefire, those have to be off the table right away, as well as getting an early agreement on caps on Ukraine's military, the size of its military, as well as foreclosing the possibility of Ukraine's eventual membership in NATO. And those are points Ukraine would not want to see given up so early in the discussions. And then there's also the question of energy assets, including a key nuclear plant that, is at risk of being in play as well, and that Ukraine also does not want to see handed over to Russia too early in the process without some concessions and guarantees built into the process.
That call in about 3.5 hours' time. Michael, thank you so much. Bloomberg's Michael Shepard helping us set up for the day in Washington, D.C. Now let's look at some stocks that we're keeping our eye on this morning. Alphabet among them. Little change this morning, slightly higher, but it is said to be in talks to purchase cloud security company Wiz. That deal will be $33 billion. It's a restart of discussions, if this sounds familiar to you, that were called off last summer after extended negotiations. The deal, which may be announced as soon as today, would be Alphabet's largest acquisition to date. It could help Google catch up with Microsoft and Amazon in what's a very competitive cloud computing market. Let's also show you what BYD is doing this morning. That's the close, jumping 4% in the Hong Kong trade. The Chinese automaker unveiled a lineup of EVs that it says can charge almost as fast as it takes to refuel a regular car. So something like 5 minutes, something that I'm sure your smartphone can't even do. The automaker's new battery and charging system can provide around 249 miles of range in that 5 minutes. It's going to start selling the technology we're going to start selling the vehicles with the new tech next month. Tesla also a little bit weaker this morning, down by about 0.5%. Coming up, we head over to Germany, where lawmakers are set to vote on a major new infrastructure package. Raj Agrawal, head of real assets at KKR, is going to be joining us to discuss investment opportunities, a conversation you do not want to miss. Stay with us. This is Bloomberg. You're watching Bloomberg Brief. I'm Danny Berger in New York. Over to Germany, where lawmakers have begun to debate a crucial plan to release defense spending from debt restrictions and set up a 500 billion euro fund for infrastructure investment. A vote is due to happen around 8:30 a.m. Eastern time. For more, let's go over to Berlin, where Bloomberg's Oliver Crook is standing by. Oliver, what are we expecting with the vote today?
Danny, we talk about seismic shifts, we talk about paradigm shifts, fairly regularly in news, but this is truly a moment where in Germany you're seeing a shift in really sundering a couple of taboos that have not been broken in many decades. We're talking, one, about the remilitarization of Germany, something that's a very fraught issue in a number of countries, including Germany itself, since the Second World War. And we're talking about doing it basically with pure debt financing. So what the Bundestag is going to vote on today is that 500 billion euro infrastructure fund. 100 billion of that is going to go to sort of climate initiatives. That was part of the concessions that Friedrich Merz needed to make to the Greens to get them on board. But the other sort of big story here is, Danny, the sort of limit on defense spending is unlimited. They could spend as much as they want, basically debt-fueled spending on the sort of defense. And they've also sort of really sort of expanded what it means to spend on defense, so the definition of defense is. So this is really a moment in which the sort of Germans are really sort of opening the fiscal taps. And we should say it, doing it in a very sort of challenging and very strange political move, where you have a man who is not yet Chancellor of Germany, who is going to the former majority of the Bundestag that has legal power but doesn't really have a mandate, in order to change the Constitution, in order to do something that he ran his entire campaign saying that he would not do. So there will, of course, be some political consequences to this. The question is if basically €1 trillion of spending over the next decade or so will make people sort of move past that and really turn this economy around, which, as we know, has been in the doldrums for a number of years.
Well, because of some of those oddities, Oliver, there had been this discussion as to whether this actually happens. And perhaps not whether it happens, but whether it happens at the extent of spending that Germany has been talking about. What is the political process at this stage? Does it look like we will, in fact, get some of these figures, the hundreds of billions of euros that had been talked about initially?
Yeah, so Danny, let's deal with a couple of different parts of what you point out. So there's first whether or not this is going to get through the Bundestag later today in terms of the votes. Basically, these majority parties have a 31-vote buffer. That means that basically it would take 31 people from the three main parties backing this to sort of either abstain, not be there, or vote against it in order for it to fail. Friedrich Merz feels very confident that he'll be able to get this through. The other question, of course, Danny, is this is a huge sum of money, but how can this money be productively spent? Do we have the projects? Do we have the capacity to be able basically to fill all of these orders? That is a different question. That, I think, longer term is a much more open one. But I think that, listen, when you look at some of the estimates that we've heard from a number of economists talking about what the impact could be on the economy, we heard it from DIW. We're talking about the infrastructure spend alone, which could be half of this package, could add 2 percentage points of GDP growth every year for the next 10 years. That is absolutely massive. Add defense on top of that, that could take it to another level, particularly at a time when these sort of traditional industries of Germany are really suffering. We think about the auto sector. Could basically a lot of that capacity, a lot of that money shift from autos over into defense.
Oliver, thank you so much. That is Bloomberg's Oliver Crook in Berlin. Now let's stay with infrastructure and the opportunity for private asset managers while we're getting the spending coming from Germany. I'm pleased to say that joining us now is Raj Agrawal, head of real assets at KKR. Raj, what a timely conversation. And I know you're also in Berlin at this moment for an infrastructure conference. What is the mood there? How different is it this time around than years past with you and your peers?
Thank you, Danny. Thank you for having me again. I must say it's incredibly different. It's palpable, the optimism in the air coming largely out of this German vote that's happening today and the anticipation of passing this infrastructure bill. Infrastructure has a multiplier effect on the economy, and the scale of what we're talking about here, if you add infrastructure and potentially what happens in defense, even as a percentage of GDP, we're talking larger than the Marshall Plan was, larger than the reunification spend was. And so when you take and then you zero in on a sector like infrastructure and the multiplier effect that has on growth, there's a tremendous optimism on what this could do for the economy. Our CIO and head of global macro, Henry McVeigh, released a piece this morning, Thoughts from the Road, where we've taken up our own GDP forecast, Henry has, for the next couple of years, and that's just the start of it. And so there's a real sense of optimism on the streets here.
Are you confident then that there is a follow-through, Raj? Again, this is such a huge change, as you pointed out, the most spending since reunification in the 1990s. There's concern that Germany will actually follow through with what is promised to get that global growth or that German growth reignited in Europe. How confident are you?
Yeah, I'll leave the politics to you and Oliver. You're better prognosticators there. But what I would say is that there's a big belief, and you can hear it in the conference. You can hear it from some of the regulators and government officials that have been here. There is a true belief that infrastructure is a key to economic growth. And just to give you a couple ideas, right? So the cost of power in Germany, or in Europe broadly, is about 23 cents a kilowatt hour. That compares to U.S. power costs of 8 cents a kilowatt hour. Investment in energy infrastructure, energy transition to make power more efficient, that's critical for competitiveness of European and German industry. And so, again, I don't know about the politics, but the conviction around infrastructure being a source of growth, that's clear and that's compelling. So if that helps, hopefully it gets passed.
Raj, have you been having talks with the German government? Where does KKR fall into all of this?
We're incredibly active on the private investment side. So it's clear that a piece of a $500 billion package will go to what people think of as infrastructure, like toll roads and bridges, and making sure that's fine. I think there'll be a piece of it. We believe that a big part of this is likely to be investing in growth sectors of the new economy, and that's likely to be digital infrastructure, so fiber, data centers, as well as energy and energy transition. And in both those, there have been massive investment themes. We have, as a firm, in the last 10 years, put over $35 billion of equity capital into the energy transition space, including 4 out of our last 5 deals here in Europe, the climate theme. And on the digital infrastructure side, if you combine, just as an example, our data center platforms. We've got 5 data center platforms globally, 2 in Europe and the Middle East, 2 in Asia, 1 global business based in the US. And the 5 of them combined manage some $50 billion of assets with about another $100 billion of advanced pipeline. And so we're active in what I think will be 2 of the key sectors behind the infrastructure program.
So you're ready. But again, Raj, has the German government been reaching out to you or vice versa? Are they having that conversation with you and your peers about the capabilities that you have at your ready?
If we could take just a lesson in history, we think this would be government helped and private sector driven and assisted. And so, much like the rest of the world, a lot of what we do is private to private collaboration, but some of what we do is also public to private collaboration. So I think we'll have all parties come together at the table. Even prior to this getting passed, all parties are looking for ways. We've been a big investor in German telecommunications, data centers, energy transition, and we hope to be even more active with what Germany is bringing to the table
today. Let me say very
today.
diplomatically answered, Raj. I appreciate that. You mentioned Henry McVeigh and the team's upgrading of German GDP in his recent notes on the road. But within that, too, and this is something we've seen across the board, it's not necessarily unique to KKR. We were just talking with BNP Paribas earlier, who's downgrading their U.S. GDP outlook. But the team, again, your economy team over at KKR has also downgraded the U.S. GDP outlook. While Europe is looking more attractive, is there a diminishing opportunity set in the U.S. if growth is starting to look weaker?
So we are big believers that regardless of the economy, especially when you look at why are we investing in infrastructure and why do our investors give us capital to manage an infrastructure, it's because we're all weather tires. Whether the economy is going great, whether the economy is having a tough time, you can count on infrastructure to protect capital in the worst of times, but also to avail you to interesting equity returns out of growth sectors, like digital and like energy transition. And so that's when you have that perspective, whether there's a slowing economic growth or increasing economic growth, there's interesting opportunity in that mix. And so that's really. We're undeterred. We think there'll be continued investment opportunity in the U.S. It's actually been our largest destination of investment historically, and when we look at our deal pipeline, we don't think that that's changing.
And I know among the themes that you invest in the U.S., one is the digital infrastructure, something that's been a huge theme generally. But Raj, the digital infrastructure is something we won't really understand the full extent of it and perhaps the payoff in 5-10 years' time with technology advancing so rapidly. Is there a real risk that we might get to 10 years and we've overinvested, that there's overcapacity? How do you judge that?
Yeah, so the folks that are, a couple things to say. One is that the people that are closest to this, that are betting their companies on this, the big four hyperscalers, they're undeterred, right? Even post DeepSeek. There was a report released yesterday that forecasted 2025 and 2026 investment by Microsoft, Google, Amazon, Meta, by these four companies into data center capacity. And the projection was that in 2025 and 2026, the projection was greater than at the same time last year prior to DeepSeek. And so those companies that know the most about it, they are undeterred, right? They believe that there's a flywheel effect, that even as you have innovation like DeepSeek, that lowers the cost, perhaps lowers the capacity requirements, it lowers the barrier for utilization as well. And it perhaps increases demand. And so when you put that together, there's a positive flywheel effect that those four companies that are closest to it, they do believe that there'll be ongoing demand 5-10 years out. What I would tell you is that as an infrastructure investor, we're trying to invest without taking that view. So we're trying to invest in a long-term protected way so that if the market finds itself overextended, we are still capital protected, through that cycle.
Raj, I think that's a fantastic note to leave it on. Thank you so much for joining. Enjoy the rest of what I'm sure is a busy agenda for you in Berlin. Raj Agrawal, their head of real asset at KKR. Coming up on the show, U.S.-Russia talks take center stage. On your day ahead, we'll set the agenda up for you. This is Bloomberg.
We'll be talking about land. We'll be talking about power plants. That's up. It's a big question. But I think we have a lot of it already discussed very much by both sides. We're already talking about that, dividing up certain assets.
President Trump speaking to reporters about the upcoming ceasefire talks with Russia. Speaking of which, let's set you up for your trading day today, because that Trump-Putin call will be happening reportedly at 9 a.m. to discuss ending the war in Ukraine. Plus, we're going to get more economic data with housing starts and building permits. That's at 8:30 a.m. Eastern. Then Jensen Huang gives his keynote speech at an NVIDIA event at 11:30 a.m. Let's now take you live to the Bundestag, where the Chancellor in waiting, Merz, has been speaking about Russia's war on Ukraine. saying that it is also a war on Europe. Merz also saying that Germany is laying the foundation for Europeans' defense push. Again, they will be voting on that defense package today in the first round. All right, that is it for your brief. Surveillance takes it from here.
Grundgesetzes möglich werdenden Investitionen, meine Damen und Herren.